Welcome to the Forex, and here we're looking at the US dollar. Now, these old lows here that we pointed out before here, there's one here and there's one further over to the left of the chart here, they're likely to be retested, and we're thinking about that from the 79. It's a little bit above the 79. And yeah, look, in Elliott terms, this is a little fourth wave moving back up through here. What I'm not sort of comfortable with are two things, is that the daily chart is deeply oversold, so it can bounce back quite strongly. And also too, for a wave two here, for a third wave to come into play here, it's not falling as fast as wave one here. And normally wave three is much stronger and sharper, and that's not the case. So we just need to be a little bit careful with that in mind. So let's just drill in here and have a closer look at this here. So what we were looking for here is a little wave four here, that the 38.2 retracement level, 38.2 comes in at 79.30, I think it was. Look, but anyway, the main point is we're looking for it to come back to 79.30 and pretty much fail to find support on 79.30. If it finds support on 79.30, that's on top of group one, well then we can expect a move back to the midpoint at that stage. So that's something to keep an eye on. If the 79.20 becomes the retested resistance, then you know that we're on our way coming back down into wave 5 of 3 here, which come a little bit lower than the 79, and then we'll look for wave 4 to come back up to wave 4 of 1 lesser degree through here. So there is a rally here. It appears corrective, and it should fail at the fourth wave of 1 lesser degree, which is in here at 79.31. So there's a little bit more in here, and this is sort of important because other markets that are sort of rallying as well would face the same sort of dilemma as well. So yeah, just a little bit more to go in here, another sort of half session or so, and then look for that 79.30 as support or resistance, and that will be important for whatever else you're trading as well. The euro doing the mirror image here, we're looking for a target of 140 in wave 3 here. That said, the current move up through here, we've got wave 1 and wave 2, and we're not finished in wave 3 yet. There'll be 5 waves, 1, 2, 3, 4 and 5. So if we just drill into that there, and that will leave us with a retest of 139. So as we're looking for the US dollar index to sort of taper out at 79.30 sort of area, the same would be said here for the 139 area here as wave 4. Confirmation that this has started to the upside would be support on top of group 1, 139.30, but of course you can move into that further earlier if you can identify the move that's starting to the upside here. So a bit of strength, bit of volume, but as I mentioned with the US dollar is that it's deeply oversold, and the euro here would be moving into the overbought area as well. So there is that sort of other pressure there that we need to sort of expect, but you would normally expect it to be overbought on wave 3 anyway. The Australian dollar, it's important to have a look at the charts on our website for the 4-hour charts, because there's two possible counts here, and I've been going over them for quite some time. One is the ABC, which is the A, the B and the C up to here, and failing, this has been then having down for wave 1, back for wave 2 here, pulling back to the 50-60% sort of area, and then rolling over from that point there. So that's one that we need to keep an eye on. The other one is that wave 4 is in place here, and we'll be moving to the upside there, and so we need to be mindful of both of those. So with that in mind and drilling in here, looking at this sort of 15-minute structure that we've been sort of tracking here, and as I mentioned, we've got to look at this move up here in terms of an impulse wave of 1, 2, 3, 4 and 5, or the corrective thing of the A, the B, and the C wave here. The C wave will be in 5 waves. So we're basically looking for 5 waves up, and the way I can count it so far, best fit is up for 1 here, back for 2 here, and then up for 3 here. Wave 4 being sideways and complicated and so forth, so we could have it in play here at wave 4, and looking for wave 5 to move up. But I have to say this little move up through here is not very not very impulsive, let's say. But look, as we can sort of revert back to the levels, and within group 1 here, 1, 2, and 3, the pivot number 2, if that becomes the retested resistance, then you know that the buys will be down from that point. As long as that holds, that's fine. Support on top of group 1, 93.30 is a positive, but it's normally in a positive when it's sort of coming up through this way. In this case, it's just sort of come down and checking back, but still positive. But in this case here, if we use the 93.40 to be long on and then adding on 93.50, then we can look at taking these highs out through here. So just observe what's going to occur here first before jumping in. The other markets that we look at, the Euro Australian in this case here, we've got a bearish bias for this market. For a couple of reasons is that the 150 is the resistance here, and also to the move that we've had up through here has been corrective. This move down through here as wave 1 has been impulsive. This one up here for wave 2 has been corrective, and then we're looking for further downside to unroll here. But I have to say that these are impulsive waves here and corrective waves back up, but I would expect more strength to the downside at this stage, and that's not the case. So as I've mentioned before, we should use the 149 as a retested resistance. The move up through here, which I've got labeled as a wave 4, it's a little bit big compared to what's sort of going on over here. Doesn't have the right look and feel, so it's feel a bit uncomfortable about it. But it is in 3 waves. So if the 149 becomes the retested resistance under here and can't get up, and you can see that a little bit like this one here trying to get up through here and starts to make new lows, then that's what you'd be looking for the short side there. The pound yen, yesterday we were looking for it to see, because from this high here, I haven't got it labeled, sorry about that, but basically we got 5 waves down through here, and then we've got the 3-wave counter trend here. This is in 3 waves, this is in 3 waves, and this is impulsive here, but basically an A and a B and a C wave here, and a bit big really for what we've got here, so that bothers me. But at the same time, it played out nicely. We've got that sharp move down there that we can call impulsive, and then we're looking for the 61.8 retracement level coming back into the 172.72 and 172.80, which it is now. So we're expecting it to fail at this point through here and move down here further. So if the 172.50 becomes the resistance, then look to short. You could probably move in there a bit earlier as well if it drops out of group 2 here. The 65 is the retested resistance. However, if this stays up here and then develops support on the 173, well, then we have to be long from that point. As simple as that. But as it stands, this whole pattern here is a bearish pattern that's unwinding, and we just need to give it a little bit time to really completely sort of play out there. The Euro yen is in the same boat as well, just on the 15-minute chart. Once again, we're looking for this move down here to come back, and yesterday to come back and retest it into the 61.8 retracement level. So from down here, 61.8 back here. So we could count this as the A, the B, and the C wave moving up here and ready to fail from this point and roll over from here. And that's fine, and you can look to add to the short positions at 140, 150 on a retested resistance. But if it doesn't come down through here, and for whatever reasons it moves up through here and find support on 142, well, we simply have to be long on 142 support. So do keep that in mind. That's always been the case, and we'll continue to keep that there as well. But yeah, we'll see how we go with that. One of the sort of drivers of all this, of course, is the US yen here, and just see if I've got a. Okay, so this is the daily chart here, and we've been talking about this pattern here. We understand that the move down through here being in 5 waves and leading diagonal triangle, and then we can see that this is corrective through here because of the overlapping wave structures happening here. So we know that it's corrective. So we're looking for a move down, quite a way down really, and we're looking at this being down for 1 and back for 2 here, and then moving down through to here. It's not moving down very nicely through here. It does have some support on the weekly trend line, so the weekly chart here. So taking from this point and this point here, this is why it's being held up here. So you could kind of use this if you sort of do a bit of work on it. So a move, because what normally happens if it's going to move through here, then it'll go back and retest that trend line. So that's something that you could look for. So you could take the breakout, but keep the position really small, and then look for the retest of that trend line in your own way, and find it on the daily and the 4 hour, and sort of nail it down to wherever it is. So yeah, once again on the sort of 8 hour chart anyway, this is deeply sort of oversold. So it's not going to get through this line of defense here that easily, but that's what we're looking for. So with markets working itself into a corner, and we would turn bullish at some point, and I've pointed them out on the pound yen and euro yen. This one here, we're just looking for it to obviously break through this trend line and give it a close below this trend line. Alrighty, that's it. So not a real lot sort of happening sort of anywhere really. We had that move from the non-farm payroll figures, and the Fed's talking about the markets requiring more stimulus and seeing the US dollar break to the downside. So that's the first sort of crack in the pavement, so to speak. So we need to see that widen as such, and the US dollar bouncing off 79, probably fading at 79.30 and moving down from that point. So we're sort of getting into a corner where trade setups are coming into play once again. So just keep an eye on those markets, and on the US dollar. You can also look at the Swissy as well. If you're looking at the US dollar, keep both those charts open. One could be leading the other one. All right, cheers.